So what happens if oil suddenly rockets to $150 a barrel? What happens next? Well, today we're going to break down that global shockwave. We'll pinpoint the clear winners and the exposed losers in what is a very high-stakes economic game. Let's trace it out.
$150. Now, that's not just a number on a screen, right? It's a critical trigger point, a threshold that would set off a whole cascade of events across the entire global economy. It's a price shock so severe it could change everything: financial markets, government policy, even your own budget, almost overnight.
And make no mistake, the reaction would be fast and it would be loud. A price spike of this size sends tremors through every stock market, every supply chain, and every government finance ministry on the globe. Quiet? Not even an option. Okay, so the big question is, how on earth do we even get to a price that dramatic? Well, it doesn't just happen in a vacuum. It takes a perfect storm of pressure to get us there.
It all starts with a major supply disruption. Think about a conflict flaring up in a key oil region or some catastrophic failure in infrastructure. Then you layer on geopolitical risk, which magnifies everything and causes countries to start hoarding what they have. And here's the kicker. All of this happens while global demand is still just chugging along, unable to slow down fast enough. Those three things together create that initial, powerful push upwards.
But what's happening in the real world is only part of the story. The financial markets are what really pour fuel on the fire. See, traders in the futures market, they don't wait for the shortage to actually happen. They trade on the fear of it happening. They start bidding prices up like crazy, and that creates this vicious feedback loop where the fear of tomorrow's shortage creates a very real price hike today. And the result is, well, it's this. You take that real-world pressure and combine it with the rocket fuel from financial markets, and the price just goes parabolic. It's a rapid, almost vertical climb that leaves the entire global economy just scrambling to figure out what to do. But here's the crucial thing to remember. This shockwave doesn't hit everyone the same way. For some, a crisis is just another word for opportunity. So let's take a look at who actually wins in a scenario like this. The beneficiaries are actually pretty clear. First, you have the energy producers themselves. From the giant oil companies to the smaller guys, their revenues just explode. Then you have entire nations, the ones whose economies are built on oil exports. Suddenly, their government bank accounts are overflowing. Their currencies, which are tied to oil, get incredibly strong. And of course, all the companies that build the pipelines and the rigs, they get to ride that wave too. This chart really puts it all into perspective. The profit surge for energy companies isn't just a little extra cash. It's a monumental windfall that completely dwarfs the rest of the market, which, by the way, is struggling to just absorb these new costs. Now, for every big winner, there's always the other side of the trade. So let's pivot and talk about who is on the receiving end of this price shock, the ones who end up bearing the enormous cost. And right here, you can see the great divide laid out plain as day. On one side, you have the exporters and producers. On the other, you have nations that are completely dependent on imported energy and industries where fuel is one of their biggest costs. The contrast really couldn't be more stark. Let's get specific. Airlines get hit immediately. Jet fuel can be a third of their operating costs. The entire logistics sector, we're talking trucking, shipping, you name it, they all face that same squeeze on their margins. Then there's manufacturing, which gets hit with a nasty 1-2 punch. Higher energy costs to run the factories and higher transport costs to move their goods. And finally, when you and I are paying more at the gas pump, we have less to spend on other things, and that hits retail and consumer goods hard. This table really just spells it out in black and white. For airlines, profit margins get absolutely crushed. For manufacturing, the cost of materials soars. For transportation, operating costs just go through the roof. For these sectors, there's really no way to dodge the immediate financial hit. So this isn't just a story about which companies win and which lose. A $150 oil shock very quickly escapes the business pages and becomes a full-blown macroeconomic crisis that affects absolutely everyone. This is the chain reaction that always follows. First, the oil price spike immediately pours into higher inflation. Now, central banks, their main job is to control inflation, so they're forced to step in and hike interest rates aggressively. That makes borrowing money more expensive for everyone, which, you guessed it, cools down the economy and leads to slower growth. And that inflation surge isn't just some abstract idea. It becomes a real painful number like this, a headline number that means the cost of pretty much everything is going up, eating away at the purchasing power of every single family. And this is the response. A number like this represents central banks slamming on the brakes, hard. It's like taking some pretty nasty medicine, It's necessary to fight the inflation fire, but it definitely hurts on the way down. And in all this global chaos, something else happens. Money gets scared. And when money gets scared, it runs to what it views as a safe place, which is often the US dollar. A soaring dollar then creates a whole new set of problems for other countries, who now have to pay for their dollar-priced oil with their own weakening currencies. It's a double whammy. So after looking at all these effects, it's really tempting to see this as just pure economic destruction. But the truth is, it's a lot more complex and, frankly, a lot more profound than that.
It really begs the ultimate question, doesn't it? If regular consumers and entire countries are paying trillions more for energy, where does all of that money actually go?
And this, right here, is the single most important takeaway. The wealth doesn't just vanish into thin air. It is being systematically transferred. It moves from the pockets of energy consumers to the balance sheets of energy producers. It is a massive, rapid, and often brutal redistribution of global wealth. And understanding that transfer, well, that's the key to understanding how our modern world really works.